Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video, I'm going to talk about an interesting company. This company, I think we spoke about a long time ago. We haven't done any research on it recently. So what I want to do is today, I want to look at the financials of this detail. We're going to talk about, in terms of what the business does, the financials, and then I'm going to show you why I actually wanted to show you this company in the first place. Okay. But before we do that, as always, please like the videos. It helps the channel a lot. Subscribe to the channel if you haven't already. And obviously join us on the Discord, where you can actually get access to a lot of the things that we normally do. So if you join the Patreon, okay, you can actually see when I buy and sell, portfolio updates. You can get access to the different trackers for the US and the UK, stock watch list, ETF trackers, and so on. We're trying to build, InshaAllah, a community of like-minded people who are helping each other and there for each other. So InshaAllah, that's the long-term plan. But for now, obviously, join us, InshaAllah, in the Discord. Join us on the Patreon. Right, so let's go back and talk about this company. The company I want to talk about today is called MSCI. And it's one of those businesses where not many people know about them, but you've seen it. You've definitely seen it. You've seen MSCI, this and that, MSCI, a lot of the indexes, a lot of the ETFs. So the company provides investment decision support tools for the clients to manage their investment processes worldwide. It operates through 4 segments, so index, analytics, ESG, and ESG being environmental, social, and governance, okay, and the climate, and includes, so the index segment provides index for use in various areas of the investment process, including index product creation such as ETFs, mutual funds, and so on. So a lot of the ETFs and mutual funds out there is actually created by this company. Okay, so a lot of the features, a lot of the options, and so on. So they do all of the benchmarking side of things, and when it comes to asset management and so on. And just to have a look at their financial, if you're really interested in the company and you want to look at a bit more details, go to their investor relations section. And one thing that I've noticed is this. So the latest earnings report is this here. And one thing I really like about this company and attracts me to this business and potentially add to the portfolio is this recurring subscription. 75% of basically the recent earnings report came from recurring subscription. And okay, asset-based fees of 22% and non-recurring was only 3%. So a lot of their basically revenue comes from this recurring revenues. And if you know me, and you know I love this type of business, because this is why I love software companies. Okay, so let's have a look in terms of the breakdown on the on where the revenue comes from. So they've got asset managers. Okay, so their client are asset managers, obviously. 10% is about hedge fund managers. Wealth management is 5%. Others is 7%. Asset owners and consultants is 9%, and banks and trading is basically another 15%. So whenever you look at this business, you can see they are in the right spaces, and they are the company of choice, just like S&P and Global, right? That company and this, between the two companies, they almost run all the ETFs out there, all the indexes out there, all the data analytics, and so on. So it seems a really interesting business. But what we want to know is now, is this company actually a buy right now? Is the financial look good? So that's the one thing we need to look at. But I'm not going to lie to you, this is really interesting for a company like this. It kind of goes under the radar. Not many people talk about this, but this is the type of business I really like to own, because, and the reason I would like to own this, the first one is this, and the second one I'm going to show you in a bit. So let's have a look at the financials first. So like I said, it's in financials. Okay, it's currently trading $543 per share. A year to date, this stock, look at this, right? So a year to date is actually 17.77% up. The 1 year is up almost 10%. And the last 5 years, this company is up 252%. 6 months, remember, everything is down there recently, right? 6 months, this company is up 29%. And for the 1 month, it's still up 5%. Even when you look at the 5 days, it's still up. So this is company that seems to me is in high demand. So let's have a look at the rest of the details. Okay, the 5-year we've already seen 252% up in terms of price. EPS, we're looking about $10.72, market cap of $43 billion. So it's not a huge company, but it's $43 billion, obviously quite big. It has a wide economic moat, and it has beta that's slightly above 1. Now, when you look at this to me, this is basically, extremely expensive company, especially for this type of business, right? PE, 50 right now. The forward PE, about 36, depending on what company you look at, okay? Sometimes you see some websites have got about 40, some websites have got about 30 something, right? 5-year average of PE is 46.8. Let's call it 47. So it's still expensive. It's expensive relative to the financial sector, and it is still expensive. Price to free cash flow here is 43, so it's still expensive. Now let's look at the rest of the stuff. Now, in terms of dividend, they pay 1%. Latest increase was 10%, and the 5-year growth rate was 28%. The annual payout is $5.52, and the ex-dividend was 16th of February. So they have increased this in dividend for 8 years, and the payout ratio is only 43%. But safety is about 61%. They don't have a lot of cash. Okay, company that's 43 billion, I would expect at least $2-3 billion, whatever. But they only have $1 billion of free cash flow, which is enough to cover the dividends anyway. But free cash flow yield of 2.5. Normally we said let's look for companies that are about 3% or more, right? But this one is just on the borderline there. Profit margins is actually really good, and operating margins. Return on equity is a negative. But total return in the last 10 years, and this is one of the reasons I've attracted this company. The last 10 years, you're looking at about 32% total return. Return on invested capital, almost at 30%. And when you look at the revenue in the last growth of the last 5 years, it's not huge, but it's at least almost 13%. Current ratio is above 1, so that means the company has enough assets to basically for their current liabilities to cover in the next 12 months. Now let's have a look at the valuations, what other websites and the analysts are thinking about this. In terms of the earnings growth, we're expecting about 16% this year, and then 12%, let's call it 13% next year, next 5 years. Current, we already seen $543 per share. Fair value, basically according to Simply Wall Street, is actually seems overvalued right now. They're expecting $408. Okay. Morningstar is saying 412, so not much difference, so 32% premium. According to TipRank, they're saying basically it's about 3% undervalued or upside right now. Okay, their price is $562, and according to Seeking Alpha, they're saying 570 is what they expected, and that's about similar sort of almost 5% upside, and they're saying it's a buy right now. Looking at this and looking at this massive PE they've got here, I would say this company is a hold right now. I wouldn't actually say it's a buy, in my opinion, until at least it comes back down to maybe around $400. But right now it seems really expensive company. But let's continue. Let's see what else we can find out about the company, right? So in terms of the Sharia compliance side of things, according to Zoya, it's actually fine. There's not much of nothing to worry about here. Shares outstanding, this is where this company shines. They pay you 1% dividend, as well as buying back their own shares every single year in the last basically 10 plus years. So every single year they're buying back their own shares, which is really good. So they're using that money, that basically capital they actually make in the profits, okay, to actually buy back their own shares, which is really good. Now let's have a look at the other thing I want to see. So if I go to Seeking Alpha and go charting here, okay, in comparison to the S&P 500, right now S&P 500 is down about 12% this year, but this company is up almost 10% just this year. Let's now look at the year to date. Okay, 3%, 17% up. Last 3 years, what I want to show you, this company has beaten the S&P 500 no matter what year you look at. Okay, what range you look at. Now almost 100% growth in the last 3 years. Okay, price return. By the way, this is only price return, it's not total return. And the S&P 500 is only returned 62%. Last 5 years, this company has returned 252%. and the S&P 500 only return about 52%. So you can see the blue line here is the S&P 500. The top orange line is actually this MSCI. So you can see it has beaten the S&P 500 almost every year. Let's look at the last 10 years. Again, similar sort of a story. 1,500% in the last 10 years in comparison to 1,503% for the S&P 500. So when I look at this, this is absolutely amazing. This was probably the reason why this company is so expensive, is because people know this is the type of business that you need to own that beats the S&P 500 and beats it massively. So that's probably why this company is, so expensive right now, because investors know that they can actually be the S&P 500. Right, now when we look at total return, is almost identical again. Okay, 1,657% up in comparison to 206% up in the last 10 years. Similar sort of a story, okay, again in 270 to 66% in the last 5 years. And we're looking at total returns, remember, into the last 3 years, 100% to 70, it gets closer, okay, and right now 10% up in just 1 year, total return of 10% and 10% down the S&P 500. So yeah, that's the company that I wanted to share with you guys today. Again, I would definitely say this is probably one for the watch list, and wait for a price better than where it is right now. This to me is too expensive. I probably would wait, I don't know, between maybe 484 something. If it comes back down, then maybe I might start looking at it, but right now it seems very expensive. I love the fact that they're buying back their own shares. They've got enough dividend, basically enough cash to cover that dividends. They are increasing that dividend basically every single year, so 10% recently, 28% in the last 5 years. On top of that, you're getting this massive return into. And by the way, this does not guarantee anything, by the way. The things could go south completely in the next couple of years. But the fact that the company has beaten the S&P 500 in almost the last 10 years, it's also good news to see that. Anyway, I'm going to stop the video right there. If you haven't joined us on the Discord, please do so. Have a wonderful day. Assalamu Alaikum.